Hello, and welcome back to Explain the Charts, your go-to channel for detailed technical analysis. Today, on September 30th, 2025, we are taking a deep dive into one of the market's most talked about stocks, Tesla, ticker symbol Tesla. The stock has been on a tear this month, but the news surrounding it is a mixed bag, creating a fascinating setup for traders. On one hand, we've seen a flurry of bullish sentiment from Wall Street, with analysts at Piper Sandler and Baird raising their price targets to $500 and even $548 respectively. This optimism is largely fueled by Tesla's advancements in artificial intelligence and the massive potential of its robotaxi business, which some believe could add $1 trillion to its valuation. We also have news of approvals for testing autonomous robot access in more states, adding credibility to this long-term vision. However, there are bearish signals we cannot ignore. Recent data showed a significant 37% year-over-year drop in Tesla's European sales for August, while competitor BYD's sales tripled in the same region. This has sparked concerns about slowing EV demand and increasing competition, which was reflected in a sharp 5.4% drop in the stock just a few days ago. Now, let's turn to the charts to see how this complex narrative is playing out in the price action. Looking at the daily chart, we can see the bigger picture of Tesla's journey over the past year. The stock experienced a massive rally in late 2024, culminating in a 52-week high near $480 in mid-December. This was followed by a sharp correction and a period of consolidation, with the price finding a bottom around the $220 level in March 2025. From that low, we've seen a steady, albeit volatile, recovery. The price action chopped around for several months before building a strong base of support in the $320 to $340 range during August. Now let's zoom in on this recent explosive move that started in September. As you can see, the month began with the stock trading around the $330 level. Driven by the bullish analyst commentary and robotaxi news, the stock surged dramatically, breaking through multiple resistance levels. A key breakout occurred when it cleared the August highs of around $350, signaling a major shift in momentum. The price then ran all the way up to the $440s, a gain of over 30% in just a few weeks. However, notice the increased volatility in the past week. The red candle on September 25th shows the market's reaction to the negative European sales data, but the bulls stepped in quickly to defend the uptrend. This price action shows a battle between long-term optimism and short-term sales concerns. Let's identify the most critical support and resistance levels on this daily chart. The most immediate resistance is the recent high in the $440 to $450 zone, where the price has stalled momentarily. Above that, the ultimate target for bulls is the 52-week high set back in December 2024, right around $480. That level is not just a technical resistance, but also a major psychological barrier. To the downside, the first area of support to watch is around the $420 to $425 level, which acted as a brief ceiling last week and should now provide a floor. If that fails, the next significant support comes in around the $395 mark, which was the peak of the powerful candle on September 12th. A break below that would be a more serious bearish signal, potentially opening the door to the old resistance zone around $350 to $360, which would now be a major area of support. Switching to the 1-hour chart gives us a closer look at the recent consolidation. Here we can clearly see the sharp sell-off on the 25th, followed by a strong V-shaped recovery over the next day. Since then, the price has been trading in a relatively tight range between approximately $425 and $445. This sideways movement after a strong uptrend often signifies a period of indecision, where the market is absorbing the recent move and digesting the conflicting news. Traders are essentially waiting for the next catalyst to decide whether to push higher or take profits. Notice the volume spikes during the large down move and the subsequent recovery, indicating that both bears and bulls are actively fighting for control at these levels. Now, let's drill down to the 15-minute chart to analyze yesterday's intraday action. The market gapped up on the open on September 29th, immediately showing bullish intent and pushed towards the $450 resistance level. It peaked near $450.98 in the early afternoon before sellers stepped in, pushing the price back down. The price then established a support level for the day around the $440 mark. For the rest of the session, it traded within this range, closing near $443. This shows that while buyers were in control early, they lacked the conviction to break and hold above the key $450 resistance area, reinforcing its importance as a level to watch. So, to recap, let's go back to the daily view and summarize what we're looking at. Tesla is in a powerful short-term uptrend, but is currently consolidating right below key resistance. The critical price levels to watch are resistance at $450 and, more importantly, the 52-week high around $480. Key support levels are at $425, $395, and the major zone around $350. Now for our unbiased prediction. We believe the bullish scenario has a slightly higher probability, let's say 60% likelihood. This is based on the powerful momentum this month and the strong institutional backing suggested by the analyst upgrades. If the stock can achieve a sustained break above $450, a test of the $480 all-time high is very likely. This scenario would be reinforced by positive news, especially upcoming Q3 delivery numbers beating expectations. Conversely, the bearish scenario has about a 40% chance. A failure to break $450 could lead to profit-taking, and a break below the $425 support would be the first major warning sign for the bulls. If any negative news surfaces, such as disappointing delivery numbers or broader market weakness, a retest of the $395 support level would be our primary bearish target. The main thing to watch for in the coming days is the release of Tesla's Q3 delivery figures, which will be a massive catalyst. Thank you for joining us on Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe to the channel, and let us know your price targets for Tesla in the comments below. Remember, this is not financial advice, so please do your own research before making any trading decisions.